It's now my pleasure, Mr. Chairman, to acknowledge the gentleman from North Carolina, Mr. Pittenger, one of the primary sponsors of this piece of legislation, yield him as much time as he may consume.
The gentleman from North Carolina, Mr. Pittenger, is recognized for such time as he may consume.
Thank you, Mr. Chairman. I do rise today in support of H.R. 1195, the Bureau of Consumer Financial Protection Advisory Boards Act. The Consumer Financial Protection Bureau continues to issue regulations designed for massive systemic risk financial institutions without considering how those same rules harm small business, community banks, and credit unions. That's why my good friend and colleague, Congressman Denny Heck, joined with me to establish a small business advisory board within the CFPB. The goal is simple: to advise and consult with the CFPB on how any proposed regulations would impact the small business community. Members of the Small Business Advisory Board must represent a small business dealing with financial services products. The legislation also encourages the CFPB director to ensure participation of women and minority-owned small businesses when appointing members to the board. H.R. 1195 also makes permanent the Credit Union Advisory Council and the Community Bank Advisory Council, both of which are currently voluntary, but they could be eliminated at any time at the discretion of the CFPB director. Credit unions and community banks are struggling under enormous compliance burdens designed for too-big-to-fail banks. They are hiring compliance officers instead of loan officers, meaning less access to capital for small business to grow and to create jobs. Clear and open communication between the CFPB, small businesses, community banks, and credit unions will improve rulemaking and lead to better outcomes for consumers. H.R. 1195 is supported by the Credit Union National Association, the U.S. Chamber of Commerce, the American Land Title Association, and the Independent Community Bankers Association. This legislation also enjoys strong bipartisan support, having passed out of the Financial Services Committee by a vote of 53-5. Allow me a moment to address the concern that was raised by the ranking member and other Democrat colleagues on their objection of how we propose to pay for the advisory boards. The CBO estimates this legislation will cost taxpayers $9 million over a 10-year period. In those same years, the CFPB will have access to $6.7 billion in operating funds. We propose making a very small reduction, just 0.1%, in the amount the CFPB is allowed to draw, which will pay for the advisory boards without additional costs to taxpayers. If the CFPB can't find $9 million in savings over 10 years out of a total potential draw of $6.7 billion, then they need another advisory board of small business owners who will travel to D.C. and teach the CFPB how to budget. You know, Mr. Chairman, our economy is growing today at a tepid pace of 2.2%. We have, in reality, about 12% unemployment when you consider the underemployed, when you consider those who have given up. Small banks and lending institutions and other lending institutions are under enormous compliance restrictions and guidelines, the same as the major banks. They need a voice at the table. We need opportunity. We need people to be able to expand their businesses, and yet they can't get capital through these small banking lending institutions. That's what this bill is all about. It's all about jobs. It's all about families and people's lives and their futures. The CFPB is supposed to be focused on protecting consumers, not protecting bureaucrats, fiefdoms, and perks. Our common sense bipartisan legislation helps focus the CFPB on their sole core mission of benefiting consumers. Small businesses create jobs. Bureaucrats create rules. Please join me in supporting H.R. 1195 so that heavy-handed D.C. regulators are forced to take time to consider how their burdensome and unnecessary regulations negatively impact small business and make necessary adjustments to protect consumers while allowing small business, credit unions, and community banks to help grow the economy and create good-paying jobs. I urge my colleagues to support this bill. Thank you, and I yield back the balance of my time to the gentleman from Texas, Mr. Nagelbauer.